Hello, it's Michael Connor. I am the founder and CEO of Vizsla Silver Corp. Vizsla is progressing a district-scale discovery in Sinaloa, Mexico. We're Mexico's most aggressive exploration company. 13 rigs turning on the property right now, making new discoveries, expanding our maiden resource. The company is very well financed with $38 million in the bank. And we're very excited about what we have here at the project.
Michael, great to see you. I think last time we saw you was back in October. You did a sort of technical session with our geo. I'll put a link to that below, help people understand the way that you're approaching this ore body and what you're looking to build out. So that's great. You're on a roadshow at the moment over in Europe. What are you talking to people about?
Yeah, absolutely. It's just been a 3-week roadshow here. I know my wife and kids are excited to see me tomorrow when I go home. We couldn't miss this opportunity to talk about the maiden resource. It's in all categories measured and indicated and inferred over 106 million ounces of silver equivalent. That was done in 18 months of drilling from discovery to resource. So really an incredible outcome from our technical team of the project. And so what we've been telling people and talking to people about here is, the maiden resource is great, but how are we growing? And the answer to that is, each of the 13 wireframes in the resource were open for expansion. The company has now moved from 10 rigs to 13 rigs. We're drilling at the Napoleon vein. We're drilling at the Tajitos vein. We made 2 discoveries, new discoveries in that area, in the resource area, on both Napoleon and Tajitos. So growth is huge here. 120,000 meters planned for the year. And that's fully funded drilling.
Right. Okay. 38 million in the bank, fully funded drilling, 13 rigs. Aiming for, what do you say? With 120,000 meters this year, off the back of last year's 100. Okay. So you're drilling this thing like Swiss cheese. To what end? Because I'm interested now in the time frame when you kind of get into production, because we've seen you get money easily, drill lots of holes. Maiden resource out, you're looking to grow that, but what point do you stop and go, right, that's enough?
Well, it might sound like Swiss cheese, but this is a big block of cheese that hasn't been drilled yet. So, the background there, of course, is that we've consolidated this district for the first time. It hasn't seen systematic exploration. Those resource areas, that carry, the vast majority of that large resource that we put out, is only 5% of the overall vein extent of the district. So, we have a lot of discovery drilling to do, but we have a lot of near resource expansion to be done as well too. So, talking about the timeline, this was a question that we repeatedly had here in the roadshow and these presentations. And really, look, we're a company that's focused on creating shareholder value. We're shareholders ourselves. We've bought over $350,000 worth of stock in the last couple of weeks. We want to be in production ourselves. We're pushing to that end. But this is a huge district. We're unlocking value. We're creating value by drilling. And it's taken a few steps to get to that production level. But now that we have, that maiden resource and several planned expansions of the resource in the coming months here and well into kind of 2023, we're moving towards that production decision. In order to get there, what we've been doing, behind the scenes is our own internal scoping study, hydrological testing, geotechnical testing, the birds and the bees study, the flora fauna studies, and all of that is playing into what we would need to do to permit a decline at Napoleon. Now, an interesting side note there is that Napoleon has a very high grade subzone here at Gallinero. So between indicated and inferred, we have about 15 million ounces grading at 650 grams silver equivalent. So really, incredible high grade zone there that could provide a number of years of starter production, and then ideally would be high margin to pay back capex. So we're making the plans. We're moving towards production, but the drill bit has moved this company from a $20 million market cap to a $400 million market cap. I think the drill bit's going to drive value for that next incremental move and multiple.
Okay, but you're cognizant that you kind of get that balance right, and that. Well, it depends what your strategy is, I guess. You could keep drilling and providing, because it's a big district that you've consolidated here. And then start trying to appeal to majors, but that's a very, very select game. if the production is the bit that kind of gives you a re-rate, it's the bit that kind of catches the eye in the marketplace. So how do you, I know you're going through the processes, but the money is being allocated towards the drill bit. At some point, you'd need to finance the kind of production component of the strategy. So that's why I'm interested in the timing, and then so how you go about doing that.
Well, the second half of this year will be the next resource update here, and I suspect that we'll have another resource update probably about 6 months after that, and that could be tied to an economic study. But you got to remember that this district is very well infrastructured. As I mentioned, we're talking about the potential of understanding what a decline around Napoleon would look like, not only for production but for exploration as well. But I've said this before, and I wonder if it irks some shareholders because it is a little bit unclear. But I think that people will be surprised by the amount of time it takes us to get into production, because it'll be quicker than expectations. Now we do have the El Coco mill.
So what do you mean by that? It'll be quicker than expectations. I mean, to get into production, it's difficult. It does take time and it costs money. So what do you mean it'll be quicker than?
Well, and that's the reason is we have the production infrastructure in place here. We have high tension power lines. We have roads. We have water, everything that you would need really to expedite that pathway. And of course, this is a past producing district, and because of that, not only is there the El Coco mill, but there's other, general opportunities to, expedite that, that milling facility as well too. And I can't say too much about that, but, because it's a mining district, there are pathways to production that are quite positive for us here.
Right. Meaning you're looking at the options with the different options now, and what you're going to make an announcement when as part of the second resource upgrade, if it does indeed involve some kind of study?
Yeah, I think, look, it's a number of steps to get to production. Of course, having a company who's just 3 or 4 weeks ago announced its maiden resource after 18 months of drilling, I think we could be doing the shareholders a disservice if we don't continue with another, let's say 120,000 meters as planned this year, to keep growing the district, because you don't want to wrap economics and a mine plan around something when each of the 13 wireframes are open for expansion. It's not the right way to do things. It's not how a skilled producer would do it, and it's not how we're doing that, because we our background is from the team production level districts with companies like Pan American, Agnico, Capstone in Mexico. So we're doing things the right way. We're not going to shortcut into production, but there's just so much more to explore just around the area that we have, right here. So that's very important.
So where's that kind of vibe come from? Because again, like lots of questions sent in about it. I mean, you're right. There's an expectation, and obviously varying degrees of experience and thoughts about how long that could take, and you've answered that to a degree. But what stimulated that line of thinking? As you say, you've only just put out a maiden resource.
Well, I think it comes from the fact that we're in a past producing district, and as part of the acquisition of the district, we did receive a milling facility there, El Coco. So I think the expectation is that we would take that small scale operation and basically bootstrap ourselves into production on a small scale. Now that was something that had quite a lot of potential when we were looking at 20-30 million ounces in a resource, 60 million ounces in a resource. But for the company to come out with a 100 million plus resource in 18 months of drilling, it's clear that that's not the scope and not the scale of this district. And when you have a discovery like this, when you have something so big with so much potential, you really can't shortchange yourself by just doing small scale production. This truly is a multi-generational resource property. I've never seen anything like this. Craig's never seen anything like this. And for us to kind of tap out early and not create value here is just, it's not the right thing to do. And we come at that not by being managers of the company, by being shareholders first.
Okay, so think big, not small. Don't get distracted. Can I talk about, you've got some warrants coming up. You'd hope they'd be exercised, wouldn't you?
Yeah, so we do have warrants in the money. I believe the strike on the first tranche is $2.38. Now that price has been adjusted because of our Vizsla Copper spin out. So the proportionate value of those shares brought that price down from 240. So it's just under 240. Those are in the money right now, and they should bring, I believe, over $30 million into the till here for us. I think that at that point gives us multiple years of runway at this, very aggressive exploration path. But at the end of the year, we have, the tradable warrants that are listed right now. Those expire in December of 2022. That should bring another 60 million or so into the bank. So there is a scenario in which Vizsla ends the year after having drilled an incredible amount of holes here with over $100 million in the bank.
Right. Okay. That's very, very, very comforting for you. I suspect. I'm just trying to say, what are you inclined to do here? We've talked about, we've sort of discounted maybe some small work which could be distracting, and saying the drill bit has so far delivered the value to shareholders. You're funded for this year, 120,000 meters. You may end the year with another $100 million. Your inclination is what, to basically open up these 13 wireframes, you're calling them, the district, basically. Is that the kind of model that you believe in, and you think that would be the right way to express the scale of the opportunity ahead of you?
Yeah, absolutely. And obviously we would budget some money there to move into what would probably be underground development at Napoleon there. As I said, not only for pre-production planning or something like that, but also for exploration. You could find many structures by going underground. So it's not like we'd sit on that cash and just go plink some holes into this the structure here. We'd continue to be a very aggressive explorer, but at the same time, leverage that cash position to enter into production and then be a non-dilutive explorer through production. Now, what I love to point out here in Mexico is the capital intensity, or the CapEx, quantum that we'd be looking at for a mill. You can go and look at Silvercrest's build there in order to understand kind of what that cost in Mexico, because it would be a comparable processing facility. So we're not talking about a gigantic copper mine in Chile with a $3 billion price tag to build it. We're talking about a couple $100 million, in terms of CapEx here, from what I've seen in comparable companies in Mexico. That would be something that would basically make Vizsla a very large scale producer of silver and gold in Mexico on a district scale. And if you can imagine something that's so big in such a large district like this, producing a huge amount of silver, I mean, that's worth multiple times the market cap right now.
Right. And I also want to knock another sort of line of questioning that sort of came in on the head, which was, given the amount of money that you've got and to be available potentially, M&A always comes up when people have got money, but you're trying to expand this district that you've consolidated. Are you going to be distracted by M&A? And don't give me the line that we all options are on the table. What's the thinking?
Well, I guess I also need to talk about, we're in a situation right now where Vizsla's finding silver at $23 an ounce, US. So that's an insane number to go and find an ounce for 23 cents. As I said, $23, 23 cents an ounce. So for us to, first of all, look at other M&A options, i.e. acquiring something else, it has to have a better return than exploration there for us, or, that doesn't seem like an option, because I don't know of any projects that really compare to Vizsla right now. So that's not something that we're looking at. Now, we don't believe that we've met fair valuation here for what we have, and we're certainly not looking to sell early here. And what I'd love to see is that we create a very large scale producer here, and reap the benefits of that. Not to say that we're against doing value creative transactions. We're shareholders, and that's important. But we want to optimize the value for the company.
Okay, and then. You've gone into the States, so you listed on the NYSE. What's that? What are you hoping that does for you? It's obviously a big silver market.
Well, yeah, it's been quite interesting. So we did list on the NYSE American in January, and it's been quite interesting to follow the volumes, because sometimes that US volume exceeds the Canadian, and so the goal is to bring more eyes on the company, basically remove all barriers for people to buy the shares, and expose Vizsla to a much larger market, which is the U.S. market. What you'll see, companies like Mag Silver and Silvercrest and others that are listed in the States, that becomes the primary volume for them. The United States, ticker becomes the primary traded entity there. So that's our goal, and we'd like to become, a very liquid household name for silver in the United States.
Well, it's the place to be for sure. Look, I know you have been on the road for 3 months and you're desperate to jump on a plane back home. So I appreciate you making time at the end of the road, as it were, to talk to us. Looks like we'll be seeing a lot of you, lots of drill results, and lots of updates, I hope, with that drill program of yours. Appreciate your time today, Michael, and congrats so far.
Well, thank you very much, Matt. I appreciate that. And it's always a pleasure to sit down with you. And want to say thank you to our shareholders as well, too. We appreciate everybody there. So thank you.